Hey everyone, welcome to a deep dive today into algorithmic trading.
Oh, yeah.
We're going to be checking out a book by Kevin Davey. It's called Building Winning Algorithmic Trading Systems.
Okay.
And it's kind of like getting a sneak peek behind the scenes of like a trader's journey.
Yeah.
And he kind of lays out, all the steps and the stories and everything that goes into building, systems that can make money.
Right.
So are you ready to kind of unpack this with me?
Absolutely. I'm excited.
Okay. On it.
Davy's book is really cool because he's very honest about his journey, and that's really valuable for anyone who is interested in algorithmic trading.
Yeah.
Because it's not all sunshine and roses.
Right.
He talks about his struggles early on.
Yeah.
And that's really, I think, a valuable roadmap for anyone starting out.
I think so, too, because he actually, takes us back to the late 1980s, when he was fresh out of college, living the dream in California.
Yeah.
And he gets this junk mail booklet. Oh, yeah.
About futures trading.
The allure of quick profits.
I know, right?
Yeah.
Like, those ones that promise that you're going to be rolling in dough? Like,
exactly.
No time.
Yeah.
And I thought it was so funny. You talked about how this booklet featured this sugar chart.
Right.
And it had, tempting gains, and he kind of got, sucked into that a little bit.
Right. But it's not that easy,
No.
Just spotting a head and shoulders pattern and cashing in.
Yeah. He talks about hindsight bias, which is so interesting.
Yeah.
It's like you look back at anything.
Yeah.
And you're like, oh, yeah, I totally would have bet on that horse, or I would have, done this or that. And it's like, well, yeah.
Yeah.
In hindsight, you can see all that, but it's completely different trying to predict it in real time.
Absolutely.
Yeah. Yeah.
You don't have that crystal ball looking backwards.
So his early attempts at system building didn't really pan out either.
Right. He was using things like triple moving averages.
Yeah. He talks about how, during those periods when the market is very choppy,
you
get a lot of false signals.
Right.
And whipsaws.
Especially back then.
Yeah.
Late 80s, there wasn't this, readily available computer power. And
right. It was a totally different time.
Yeah. High frequency trading and all that.
Absolutely.
So it was a lot harder.
Yeah.
Then he tells a story about the hogs, which I thought was hilarious.
Oh, yeah.
He's up $400.
Right.
And he's feeling pretty invincible. And he's even,
cocky,
trying to convince a coworker who's very skeptical that trading commodities is a cakewalk.
Easy peasy.
And then
the market turns.
And
he's ignoring his risk management rules.
Ugh.
And he ends up with a significant loss.
The classic.
Letting
your emotions get in the way of sound trading.
It really is.
Principle.
That's what happens when you don't follow your rules.
It's so true.
Yeah.
So what's the lesson?
Never underestimate the importance of protecting your capital, no matter how confident you feel.
Yeah, it's like they say pride comes before the fall.
Exactly.
So after these, initial bumps in the road, did he just throw in the towel?
No, he kept going.
Okay.
He's persistent, this guy.
Right.
Yeah. He explored, some different approaches like scale trading, averaging down.
Yeah.
But ultimately, he realized those methods have pitfalls.
Right.
Especially the danger of adding to a losing position.
Yeah, like digging yourself in a deeper hole.
Exactly.
Yeah.
Exactly. You don't want to do that.
No.
And, he even talks about a time when he linked a wheat trade to a baseball game.
Oh, wow.
Yeah.
That's a really
I know, right?
Interesting.
Yeah, he was watching his hometown team, the Cleveland Indians, battling it out in the playoffs. And somehow he convinced himself that the fate of wheat was tied to their success.
Oh, my gosh.
Yeah.
That's so funny.
I know.
So how did he finally, break through and find success?
Well, his story really highlights
that
there's no overnight success in trading.
Right.
It took him years of trial and error, learning from his mistakes, constantly refining his approach.
Okay.
And, eventually he did win a major trading contest.
Wow.
Which, proved his skills.
Yeah.
And that solidified his decision to become a full-time trader.
So he finally took the plunge.
He did.
What were some of the key things that he considered before going full-time?
Well, he really emphasizes the importance of having a solid foundation,
Okay.
having a savings
Right.
to cover your living expenses for a while, having a supportive family,
Who
understands the demands of trading.
Yeah.
And having a dedicated workspace free from distractions.
Oh, yeah. Gotta have that.
You gotta have your space.
Yeah.
Yeah.
So it's not just about the trading system. It's about setting yourself up for success.
Exactly. It's about your whole life.
Yeah, in every aspect.
Exactly.
Okay, cool.
And he also talks about, having multiple trading strategies.
Okay.
And multiple brokers,
Yeah.
not putting all your eggs in one basket.
Don't want to rely on just one thing.
Exactly. And of course, robust risk management is non-negotiable.
Makes sense.
Yeah.
Now let's get into the heart of it.
Okay.
Building the trading system.
All right.
How did Davey approach this, and what were some of his key insights?
Well, he starts by asking a really fundamental question.
Okay.
How do you know if a trading system is actually good?
That's a good question.
Yeah.
Because I think a lot of people think, I made some money on this historical data and...
Right, it looks great.
It must be.
On paper.
Yeah.
But is it actually...
It is sustainable.
Right.
And will it adapt,
to changing market conditions.
So how do you avoid falling into that trap?
Well, that's where backtesting comes in.
Okay.
But Davey warns against relying solely on, optimized historical data.
Yeah.
It's easy to tweak a system to perform well on past data.
Yeah.
But that doesn't guarantee that it'll work in the future.
It's like training for a marathon.
Yeah.
On a treadmill.
Yeah.
You might feel great, but can you actually handle the real hills and the unpredictable weather on race day?
Exactly. That's a great analogy.
Wow. So what does he recommend instead?
He emphasizes the importance of out-of-sample testing.
Okay.
It's like giving your system a real-world exam. You test it on data that it hasn't seen before to see how it performs under pressure.
Like a pop quiz.
Exactly.
And what about things like commissions and slippage?
Ah, yes, the dreaded trading costs.
Right, because you can have this great system.
Right.
But if it's eating up all your profits and fees...
Exactly.
He stresses the importance of considering these costs realistically.
Yeah.
During backtesting.
Okay.
Slippage can be much larger in live trading than many people anticipate.
Especially in fast-moving markets.
When things are moving quickly.
So you've got to make sure that your system can handle those real-world costs.
Absolutely.
And still come out ahead.
Okay, so what are some of the techniques that he uses to evaluate systems?
Well, he advocates for this multi-layered approach. He suggests, starting with a visual check.
Okay.
Using what's called an equity curve.
An equity curve. Now, can you explain that for our listener who might not be familiar?
Sure. An equity curve is basically just a chart that shows your account balance over time. And, by looking at the shape of that curve, you can kind of get a quick sense of how the system is performing overall.
Okay. So it's like a visual health check for your trading system.
Exactly.
It is. Okay.
And, is it steadily growing or is it prone to wild swings?
Right, because you don't want to be on that roller coaster.
Yeah, you want to see something a little bit more stable.
Yeah.
Hopefully.
So along with the equity curve, what else does he suggest looking at?
He suggests looking at, some key performance metrics.
Okay.
Like net profit, profit factor, average trade profit.
So it's like checking your vital signs.
It is, making sure everything is functioning as it should.
Gotcha. And what happens after that initial screening?
Well, if a system shows promise, then it's time for a deeper dive.
Okay.
And Davey recommends using techniques like Monte Carlo simulation.
Ooh, Monte Carlo simulation.
Yeah.
Can you explain that?
Sure.
In a way that I can understand?
So imagine you're rolling a dice.
Okay.
There's a 1 in 6 chance of rolling any particular number.
Right.
But if you roll that dice thousands of times, you'll start to see a pattern emerge.
Okay.
That's the basic idea behind Monte Carlo simulation. You're running thousands of simulated trades based on the system's historical performance.
So you're basically running like virtual trials to see how your system might perform.
Yeah, under different market scenarios.
Okay.
Exactly.
So what kind of information does that give you?
Well, it helps you assess things like the risk of ruin.
Okay.
Which is the probability of your account going bust.
Right. You don't want that.
No, you don't.
And it shows you the median maximum drawdown.
Yes.
Which is the largest potential loss you might experience.
That's exactly.
Okay. And the median percentage return.
Right. So you get a sense of the potential upside as well.
So it's like having a crystal ball for your trading system.
In a way, yeah.
So it gives you all this really valuable information about how it might perform under different conditions.
Exactly. And then
what else?
He also brings up the value of diversifying your trading systems.
Oh, diversification.
Just like with a financial portfolio.
Yeah.
Yeah, same principle.
Spread the risk.
Spread the risk, exactly.
Don't put all your eggs in one basket.
Right. By, spreading your risk across different markets, different strategies, and even different time frames, you can potentially smooth out your equity curve. And reduce the overall volatility.
So it's like having a balanced diet for your trading portfolio.
Exactly. That's a great way to put it.
Now let's move on to position sizing. Which is how much you risk on each trade.
Yeah.
And Davey really emphasizes this, doesn't he?
He does.
Why is that so important?
Well, he talks about position sizing as the point where risk and reward become a team. It's about finding the right balance, between maximizing potential gains and protecting yourself from catastrophic losses.
Right, because you can have a great system.
Right.
But if you're risking...
But if you're overexposed...
Yeah, way too much.
On any one trade, you can blow yourself up.
You can blow up your account, yeah.
Yeah.
So what are some of the techniques that he suggests?
Well, one he discusses is fixed fractional sizing. And this basically involves allocating, a fixed percentage of your capital to each trade. So that you're not risking too much.
So you're not blowing up your account on any single trade.
Exactly.
Now, I've also heard of this concept called optimal F by Ralph Vince.
Right.
That's supposed to mathematically optimize your position size.
Right. Optimal F.
What are your thoughts on that?
Optimal F can be tricky. It's a very mathematical approach. But it can be extremely aggressive. Often leading to large drawdowns. Which can be scary.
Yeah. Especially if you're not prepared for them.
Right. And so Davey really encourages finding a position sizing strategy that aligns with your comfort level. Even if it means sacrificing some potential return.
It's about sustainability in the long run.
It is.
So what are some other things that he highlights before going live with the system? Well, he stresses the importance of having, solid accounting practices. And choosing reliable brokers. You need to have that infrastructure in place.
Right.
To track your performance, manage your operations effectively. It's about trading like a business, not just a hobby.
Not just, dabbling in the markets.
Yeah.
Okay, so what about those what-if scenarios?
Oh, yeah. The things that keep you up at night.
Like what happens if your computer crashes or your internet goes down?
Right. He talks about having backup plans. And he even mentions using virtual private servers or VPSs for increased reliability.
So what's a VPS?
Basically, it's like a remote computer
Okay.
that keeps your systems running 24/7.
Gotcha.
Even if your home internet goes down.
So it's like an insurance policy for your trading operations.
It is. It is.
Okay. And then what about something that's often overlooked?
Yeah.
Like rolling over futures contracts.
Kind of dreaded rollover.
Right. Yeah. He explains different methods like the quick roll, the leg-in roll, the exchange-supported spread roll.
So there are different ways to do it.
There are.
And you got to understand the nuances.
Yes.
Okay. So now I'm curious about something else he mentions.
Okay.
The cautionary tales.
Yes.
These are like the traders.
Right. These are the characters, the cautionary tales you hear around a campfire.
Okay.
But instead of ghosts and goblins, they're about traders who made common mistakes.
Oh, so these are like real-life lessons.
Real-life lessons.
Yeah. Well, so who are some of these characters?
Well, he introduces us to Don Demo. Gus the Guru.
Okay.
Peter the Promoter.
Okay, and what lessons do they teach us?
Well, Don Demo.
Okay.
He's the classic case of the trader who looks like a superstar in a demo account. But then crashes and burns.
Oh, no.
When real money is on the line,
yeah,
it's a reminder that trading psychology plays a crucial role. Managing your emotions like fear and greed becomes much more challenging.
Yeah, when you're facing actual losses.
Real money.
And what about Gus the Guru?
Oh, Gus. He's the self-proclaimed market wizard.
Okay.
Who seems to have all the answers until his account goes bust.
Oh.
It's a cautionary tale about the dangers of blindly following those who promise easy riches.
Right. Don't believe everything you read on the internet.
Exactly. Or here.
Or here. Right.
Yeah.
So always do your own due diligence.
Absolutely.
Okay. What about Peter the Promoter?
Oh, Peter. He's the trader with an inflated sense of worth.
Okay.
He thinks he's got this system so good that he charges outrageous fees for access. And it's a reminder that, humility is often a virtue in trading. The best traders are often those who are constantly learning, adapting, acknowledging that they don't have all the answers.
Yeah. Trading is a constant learning process.
It is.
There's always something new to discover.
Absolutely.
Okay, so these cautionary tales are all about avoiding those pitfalls that can derail a trader's journey.
Common mistakes that people make.
Yeah. Who else does he highlight?
He also introduces Connie, the compounding queen.
Okay, what's Connie's story?
Well, Connie is obsessed with the power of compounding.
Okay.
Which is the idea that your profits can grow exponentially over time.
Okay.
If you reinvest them.
Right.
But she becomes so fixated on those potential gains that she neglects other essential aspects of trading, like risk management. And as you might have guessed,
what happens?
It doesn't end well.
So it's like putting all your eggs in one basket and just hoping for the best.
Exactly, hoping that compounding will do all the work for her.
Not a sound strategy.
Not a sound strategy, no.
Who else is in this lineup of cautionary tales?
Well, then there's Ian, who embodies the danger of conspiracy theories.
Oh,
he's convinced that, some shadowy group is manipulating the markets.
Oh, yeah.
And blaming them for his trading failures.
Right. So he can't take personal responsibility.
Exactly.
Yeah. I've definitely encountered those types.
Oh, yeah. They're out there.
Always blaming,
external forces.
External forces, yeah.
Okay.
Instead of taking responsibility for their own actions.
Right. It's about having a realistic mindset.
It is.
And understanding that,
that market forces are complex.
Yeah. They're not always rational.
No, they're not.
Okay. So last but not least, who else does Davey warn us about?
Finally, there's Slick Sam.
Slick Sam.
Yeah.
What's his deal?
Well, he's the smooth-talking system vendor or trading room operator who preys on unsuspecting newcomers.
Okay.
With empty promises and misleading claims.
Right.
He might offer a guaranteed system that'll turn $1,000 into $1 million in a month.
Yeah, right.
Yeah.
Those get-rich-quick schemes.
Yeah.
Exactly. It always sound too good to be true.
They do.
Yeah.
So is Davey trying to scare us away from trading with all these cautionary tales?
No, not at all.
Okay.
He just wants to prepare you.
Okay.
For the realities of the game.
Okay.
He wants you to be aware of these common pitfalls.
Right.
So you can avoid them and make informed decisions.
So he's like a guide who's been through it all.
He is.
Okay.
He is.
And he's showing you the ropes and warning you about the dangers along the way.
Yeah.
Okay, so what does all this mean for our listener?
Well, it means that building winning algorithmic trading systems isn't a walk in the park.
Right.
It takes hard work, discipline, a commitment to continuous learning.
Okay.
It's not just about the technical aspects of developing a system.
Okay.
But also understanding, the psychological and emotional side of trading.
So it's not just about the numbers. It's about having the right mindset.
It is.
And mental fortitude.
Absolutely.
To stick to your plan.
Yes.
And weather those inevitable storms.
Yeah, trading is not for the faint of heart.
No, it's not.
But it can be incredibly rewarding.
Yeah, and I think what sets Davey's book apart is that he doesn't just tell you what to do.
Right.
He shows you through his own experiences.
Right.
Both the successes and the setbacks.
Exactly.
So it's like having a mentor.
It is.
Right.
Guiding you through the process.
Yeah, helping you avoid those costly mistakes.
Yes.
And navigating the complexities of algorithmic trading.
Absolutely.
Now, I want to circle back to something that Davey mentions repeatedly.
Okay.
And that's the importance of rigorous testing.
Yeah.
He talks about backtesting walk-forward analysis.
Yes.
And Monte Carlo simulation.
Yeah, those are all essential tools.
So he's not messing around.
No, he's not.
It's about really making sure that your system can stand up.
Yeah, to scrutiny.
To scrutiny, yeah, and to the, the rigor.
You got to put it through the ringer.
You got to, yeah, exactly. Yeah. You got to put it through its paces.
Absolutely.
And so it's like a multi-layered approach.
It is.
To testing to make sure that, it can handle different challenges.
Right, and that it has a real edge.
And come out on top?
Yes.
Now is testing a one-time thing?
No. It's an ongoing process.
Okay.
Yeah, you can't just, set it and forget it.
Right, because markets change.
Markets evolve.
Yeah.
Conditions change.
Yeah.
Systems that once performed well can suddenly break down.
It's like a car.
Yeah.
You need regular maintenance.
You do.
To keep it running smoothly.
Absolutely.
So you got to stay vigilant.
Yes.
You got to adapt to new information. You've got to be willing to make adjustments.
Yeah, the trading landscape is constantly shifting.
It is.
Yeah.
Okay, so how do you stay ahead of the curve?
Well, he encourages you to develop a systematic approach to monitoring.
Okay.
So
what does that look like?
You track key metrics like your win rate,
Mm-hmm.
average win size,
Right.
average loss size,
Okay.
maximum drawdown.
Mm-hmm.
Identify any deviations from the expectations that you set, during the testing phase.
Okay, so it's like having a dashboard for your trading system.
It is.
And making sure that all the gauges are pointing in the right direction.
Exactly.
And he also provides some really practical advice on the operational aspects of trading.
Yeah.
Things like selecting reliable brokers, having backup plans in place, and managing that rollover process for futures contracts.
Yeah.
So it's not just the big picture stuff.
Yeah.
It's the little thing.
But details matter.
The details matter. That can really make a difference.
Absolutely.
Okay, so now I want to touch on a concept
Right.
that Davey introduces, and I thought was really thought-provoking.
Okay.
He says that even a seemingly profitable system might not be worth trading.
Yeah, that's an important point.
Why is that?
Well, he uses an example of a system that has a high expected value.
Okay.
Which means it's statistically likely to be profitable.
Okay.
But it also comes with a significant risk of ruin.
Okay.
And large potential drawdowns.
So even if it's mathematically sound, it might not be suitable.
For everyone.
For everyone, right?
Yeah.
It's like that high-performance sports car. It's capable of incredible speed, but it's not for the faint of heart.
Exactly.
So you got to choose a system that aligns with your personal
risk tolerance.
Yeah. And your
financial goals.
Yeah, your financial goals.
Trading style.
Yeah, and your trading style.
Yeah.
It's about finding the right fit.
It is.
So that you're not constantly
stressed out.
Yeah. Okay, cool. So if our listener is considering venturing into the world of algorithmic trading,
yes,
what are some of the key takeaways that they should keep in mind?
Well, Kevin Davey's book is an excellent resource. Oh. It offers a wealth of knowledge and insights. Mm-hmm. It's a comprehensive guide.
Yeah.
Covering, the technical, the operational, and the psychological aspects of building systems that can withstand the test of time.
So it's not a get-rich-quick scheme.
No.
It's a roadmap.
It is.
For those who are willing to put in the hard work and the dedication to succeed in this challenging
but potentially very rewarding field.
Yeah, and one of the biggest takeaways is that trading is a journey.
It is.
Not a destination.
Absolutely.
It's about continuous learning adaptation.
Yeah.
And refining your approach as markets evolve.
Exactly.
So with that in mind, let's move on to the next part of our deep dive where we'll explore a specific example of how Davey puts all these concepts into practice.
Sounds good.
By building his Euro day and night trading system.
Oh, let's do it.
Okay.
So in this Euro day and night system, Davey really walks us through, his entire process.
Yep.
From the initial idea all the way to the live trading phase.
So it's like we're looking over his shoulder.
Yeah, exactly.
As he builds this thing.
Yeah.
So where does he start?
Well, he starts by setting a SMART goal.
Oh, a SMART goal.
Yeah.
So remind us what SMART stands for.
So that's specific, measurable, achievable, relevant, and time-bound.
Okay, so it's not just like, I want to make $1 million.
Right. It's got to be.
It's got to be.
More specific than that.
Yeah.
Yeah. And in this case, he wants to create a system that trades the euro currency futures.
Okay, so he's picked his market.
Yeah.
Why the euro?
Well, he doesn't go into a ton of detail in the book about his specific reasoning.
Yeah, okay.
But, the euro, as a major global currency, offers plenty of trading opportunities due to its volatility and the volume of transactions.
Okay, that makes sense.
Yeah.
So he's picked his market. What kind of time frame is he looking at for this system?
So in this case, he's looking at an intraday system.
Okay.
Designed to capture price moves.
Okay.
During both the European and the U.S. trading sessions.
So it's day and night trading.
Day and night trading.
Gotta love it.
Gotta love it.
All right, so he's laid the foundation. He has his trading idea. What's next?
Well, he talks about, his preference for systems that trade less frequently.
Okay, so not like high-frequency trading.
No, not scalping, 100 trades a day.
Right.
He's looking for that balance.
Okay.
Between, minimizing transaction costs.
Yeah, got to keep those fees low.
Right.
And
ensuring statistical significance.
Statistical significance, now for our listener who might not be a statistics whiz.
Sure.
Can you explain that a little bit?
Yeah, basically it means having enough trades to be confident that the system's edge isn't just due to random luck.
Right, because you can get lucky.
You can
sometimes.
Right. A few wins doesn't mean
you've
cracked the code.
You haven't figured it out.
Yeah, so you need a decent sample size.
You do.
Okay.
To make sure the system is actually generating consistent profits over time. Okay, so that's what statistical significance is all about.
Yes.
Gotcha. Okay, so he's carefully considering all these factors as he's building the system. What else does he emphasize in this early stage?
Well, he stresses the importance of meticulous data selection.
Oh, yeah, the data is so important.
Garbage in, garbage out.
Exactly. Yeah. So what kind of data is he using?
Well, he talks about using continuous contract data.
Continuous contract data. Now, explain that to our listeners.
Yeah, so basically continuous contract data helps to smooth out the price history and avoid the jumps.
Okay.
That can happen when you switch between individual futures contracts.
So it's like creating a seamless price chart.
It is. Making sure you have a clear picture of the price action over time.
And this is really important for backtesting.
It is. Yeah, because you want to make sure that you're not getting false signals or misleading results.
Yeah, because of those jumps in the data.
Exactly.
Okay, cool. So he's got his goal, his trading idea.
Yes.
His data is all set.
He's ready to go.
Now it's time to start building.
Yeah.
What does that process look like?
Well, Davey's approach to system development is very methodical and multi-layered.
Okay.
He starts with what he calls limited testing.
Limited testing?
Yes.
What is that?
So basically, he focuses on evaluating the entry and exit logic separately before putting the entire system together.
So it's like building a car by testing the engine and the brakes separately.
Exactly. Before putting the whole thing together.
Yeah, why does he do that?
Well, by isolating those different components.
Okay.
He can pinpoint any weaknesses or areas for improvement early on.
So it's easier to troubleshoot a single component.
Yeah, it is.
Okay.
Than to try to debug this complex system.
Yeah, when it's all put together.
Yeah, all at once.
Okay, so it's like a divide and conquer strategy for system development.
It is.
Okay.
And so he tests, his entry logic against various exit strategies.
Okay.
Like fixed stops and targets.
Okay.
Fixed bar exits. And even random exits.
Wait, random exits?
Yeah.
Why would he test against that?
Well, it might seem counterintuitive.
Okay.
But testing against random exits helps him understand how robust his entry logic is.
Okay.
If the system can generate profits, even with random exits.
Okay.
It's a strong indication that the entry logic is capturing some genuine market inefficiencies.
So it's like stress testing your system?
It is.
Making sure it can handle different scenarios. Okay.
And then he does the same thing for the exit logic.
Okay.
He'll use like a similar entry approach and then test various exit strategies to really isolate the effectiveness of those exit rules.
So it's a series of like controlled experiments.
It is.
To try to find the best combination.
A combination of entry and exit logic.
That produces the best results? Okay, so he's like a scientist.
He is.
In a trading lab.
A mad scientist.
Yeah.
In the trading lab.
Okay.
Coming up with concoctions.
So, I've heard traders talk about monkey tests.
Ah, yes, the monkey test.
Is that something that Davey mentions?
He does.
Okay.
He does.
What's a monkey test?
So basically, he's comparing his system's performance to that of random entries and exits.
Okay.
If his system can't beat a monkey throwing darts, then there's no point in trading it.
Then you might as well just flip a coin.
Right.
Okay, so he's doing all this preliminary testing.
Yeah.
But he's still not optimizing over the entire data set, right?
No, he's saving a portion of that data for out-of-sample testing.
So out-of-sample testing is like...
It's like taking a driving test.
Yeah.
On a route you've never driven before.
Right.
That's the real test of your skills.
Okay, so he's moving from limited testing to more in-depth testing.
Right.
What does that involve?
So he uses a technique called walk-forward analysis.
Walk-forward analysis.
Yeah.
Now, this sounds kind of complicated. Can you break that down for us?
Yeah, so imagine you have 10 years of data.
Okay.
You might use the first 5 years as your in-sample data.
Okay.
To optimize your system.
Okay.
Find the best parameters and rules.
Okay.
And then you would use the next year of data as your out-of-sample data to see how the system performs on data that hasn't been optimized on.
Okay.
And then you move the window forward a year.
Okay.
Re-optimize on the now 6 years of in-sample data.
Okay.
And test on the next year of out-of-sample data.
Okay.
You just keep repeating this process until you've reached the end of your data set.
So you're essentially simulating how the system would have performed if you were trading it live over that 10-year period.
Exactly.
But re-optimizing it.
Yes, periodically.
Periodically as you get new data.
As you go.
Okay, so it's a much more robust
it is.
And realistic approach.
Much more real.
Than just optimizing over the entire data set.
Yeah, because that can give you a false sense of security.
Right. It's like teaching to the test.
Exactly. Right. And so walk-forward analysis really helps you see how the system adapts to changing market conditions.
So this is really important.
It is.
I'm starting to understand why he emphasizes this so much.
Yeah.
What comes after the walk-forward analysis?
When he moves on to Monte Carlo simulation.
Okay, so Monte Carlo simulation.
Which we talked about earlier.
Right, where you're running thousands of simulated trades.
Right, thousands of trials.
To see what could happen.
Yeah, what are those range of potential outcomes?
Okay, so walk-forward analysis is testing it in a simulated real-time environment.
Right.
And then Monte Carlo is testing it over thousands of potential outcomes.
Yeah, and each one gives you a different perspective on the system's potential and its risks.
Okay, and so what's he specifically looking for in the Monte Carlo results?
Well, he's looking at things like, the worst case scenario, not just the best case ones.
Right, got to be realistic.
Got to be realistic.
What about things like slippage and commissions?
Ah, yes, those trading costs.
Yeah.
He emphasizes using realistic assumptions for those.
In the Monte Carlo simulation.
In those simulations, yeah.
Okay, because those can really eat into your profits.
They can.
If you're not careful.
Absolutely.
Okay, so it's all about being realistic.
It is.
And not getting carried away with those, overly optimistic projections.
Right, those pie-in-the-sky returns.
Yeah, that don't factor in the real cost of trading.
Right.
So he's using those Monte Carlo results to determine...
Yeah, he's trying to figure out
an
appropriate position sizing strategy.
Okay, so it's not just about how much you could make.
Right.
It's about how much you're willing to risk.
To
make it.
Exactly.
Okay, cool.
And then he moves on to the incubation phase.
The incubation phase?
Yes.
What is that?
So basically, he's watching the system trade. In real time, but without actually risking any real money.
So it's like a test drive before you buy the car.
Exactly. It is.
Yeah.
It's a way to confirm that the system is behaving as expected.
Okay.
Identify any potential issues, gain confidence in its performance before committing real capital.
That sounds like a really smart move.
It is.
What kind of things is he looking for during this incubation phase?
Well, he's comparing the system's real-time performance to the expectations that he set during the testing phase.
Right.
He's looking for any red flags that might warrant further investigation or adjustments.
So it's like a final check.
It is.
To make sure everything is running smoothly.
Yeah.
But I imagine it must be really tough.
It can be.
To just watch it.
Yeah.
Especially if it's generating profitable signals.
You want to jump in?
Yeah.
But he emphasizes that, the incubation phase is a valuable learning experience.
Okay.
It helps you get comfortable with the system's trading style.
Okay.
The frequency of trades. The size of the potential wins and losses.
Okay.
It's about building that mental resilience.
Right.
Needed to execute the system consistently.
Okay.
Without letting your emotions get in the way.
Yeah. You don't want to let fear or greed cloud your judgment.
Exactly.
So it's about mastering the psychological aspect of trading as well.
It is.
It's not just about the system.
No, it's about you as the trader.
Okay.
It's a holistic approach.
Right. It's all connected.
It is.
Okay. So he's tested the system rigorously.
Right.
He's incubated it.
Yeah.
He's mentally prepared.
He's ready to go.
Now what?
Then and only then does he move on to live trading.
All right.
Putting real money at risk.
This is the moment of truth.
It is.
All that hard work.
All that preparation.
All that preparation leads to this.
Right.
So what are some of the key things that he considers in this final stage?
Well, he starts, with an appropriate account size.
Okay.
Considering the system's risk profile, his personal risk tolerance.
Right.
And his financial goals.
All right.
He emphasizes having a predetermined exit strategy.
Okay. A predetermined exit strategy, what does that mean?
So that's a clear set of rules that dictate when to stop trading the system.
Okay. So you need to know when to walk away.
You do.
Whether you're winning or losing.
Yes.
So what are some examples of those exit strategies?
Well, he talks about, setting a maximum drawdown limit.
Okay.
If the system loses more than a certain percentage of the account, you stop trading it.
Okay.
He talks about using a trailing stop loss, which is a way to automatically exit a trade when the price moves against you by a certain amount.
Gotcha.
And, he also mentions setting a time limit for trading the system.
Okay.
You might decide to trade it for, a specific number of months or years and then reevaluate his performance.
So it's about having a plan for all scenarios.
It is.
Not just hoping for the best. Okay. And he also revisits the importance of position sizing.
Yes. Right. Yes. Adjusting that position size based on the account balance and the system's risk profile.
Right, because even if the system is generating winning trades, if your position size is too big, you can still wipe out your account.
You can blow up.
With a few bad trades.
Yes, even with winners, you can blow up if your position sizing is too large.
Exactly. And then he dives into the practical considerations of live trading.
Right.
Things like setting up automated trading systems.
Yeah.
Using VPSs for increased reliability.
Yeah, you got to make sure those trades are executed.
Right.
Reliably.
You don't want to be, missing trades because of a technical glitch.
Right. And managing that rollover process.
Yeah, for those futures contracts.
For those futures, yeah.
So he's covering all the bases.
He is.
From the technical to the operational.
He doesn't leave any stone unturned.
And, of course, he stresses the need for continuous monitoring.
Always monitoring.
During live trading.
Yes, you're tracking that performance.
Okay.
Identifying any deviations from your expectations. And making adjustments as needed.
Okay.
Yeah. You got to be adaptable.
Right.
Respond to those changing market conditions.
So trading is not a set it and forget it endeavor.
No, it is not.
It's an ongoing process of
learning,
adapting, refining.
And refining.
Yeah.
And while Davey advocates for this data-driven approach, he also reminds us about the limitations of backtesting.
Yes.
Right.
Yes, backtesting is not a crystal ball.
It's not a crystal ball.
It's not a guarantee.
You can't just rely on the past to predict the future.
No.
And one of the things that he talks about is this potential for overfitting.
Right.
So can you explain overfitting to our listeners?
Yeah, so overfitting is basically when you tweak your system to perform really well on that historical data.
Okay.
But it fails to generalize to new market conditions. Right, so it's like you're teaching to the test.
Exactly.
You're getting really good at this one specific data set.
Right, but in the real world, things are always changing. You got to be able to adapt.
And Davey encourages traders to view backtesting as a tool for gaining insights and developing hypotheses, but not as a guarantee of future success.
Right.
So it's a tool.
A tool in your toolbox.
It's not the be-all, end-all.
Right.
And one of the most important things that Davey emphasizes throughout the book is the need to manage expectations.
Yes. Expectations are a dangerous thing.
They are, especially in trading.
Especially in trading.
Right.
And, he's very upfront about the fact that even the most rigorously tested systems will experience periods of drawdown.
Right.
There's no system that wins all the time.
Holy grail system.
Yeah.
So you got to be prepared for those bumps in the road.
The inevitable bumps. Yeah. It's about developing that mental resilience to handle those setbacks.
Without panicking.
And
abandoning your trading plan.
Right.
So trading is as much a mental game as it is a technical one.
Yeah. You got to master your emotions. You got to stick to your plan.
Yeah.
Focus on the process, not just the outcomes.
Okay, that's a great point to kind of wrap up this part of our deep dive.
Okay.
We've covered a lot of ground from Davey's initial trading experiences to his very methodical approach to system development and his emphasis on continuous learning and adaptation.
It's been a fascinating journey.
It really has.
Yeah.
And in the final part of our deep dive, we'll explore some of the key takeaways from Davey's book.
Okay.
And discuss what they mean for you, the listener, as you embark on your own trading journey.
That sounds good.
Okay, so we're back for the final part of our deep dive into Kevin Davey's Building Winning Algorithmic Trading Systems.
Right.
We've explored so much already, like his journey, his system development approach, all the, testing and risk management.
Right, all those little details.
Yeah, all those things that can really
make or break you.
Yeah. So I think one of the biggest takeaways from this book is that trading is not about finding some magic formula.
No, magic formula.
Let's get rich quick scheme.
No.
Right.
It's about putting in the work.
It is.
The hard work.
Yeah.
The discipline.
Yeah.
The willingness to learn and adapt.
Constantly.
Right.
And Davey also emphasizes that it's not just about the technical aspects of building the system.
No.
It's also about,
Yeah.
Yeah.
The psychology.
Mental game, the emotional side.
Yeah. So how do we kind of approach that side of things?
Well, he talks about managing expectations, knowing that even the best systems will experience drawdowns.
There are going to be losing periods.
There will be. Yeah. It's inevitable. So how do you deal with that emotionally?
Well, you got to have that mental fortitude to ride out those rough patches without letting fear or greed take over.
Dictate your decisions. Exactly. So you need to have a plan.
Yes, a plan.
And stick to it.
Yeah, even when it's tough.
Even when you're doubting yourself.
Especially then.
Yeah.
Yeah.
And he talks about focusing on the process, not just the outcomes.
Right. Process over outcome.
Yeah.
If you've done your due diligence, you've tested your system, you're following your plan, you got to trust the process.
Trust the process. Okay. And I like how he also talks about how trading doesn't have to be this solitary pursuit.
Right.
It's good to have a support network.
It is.
Fellow traders, mentors, even friends and family who understand what you're going through.
Absolutely. Because it can be.
Because it can be tough.
It can be lonely.
Yeah.
And stressful.
So having people to talk to, bounce ideas off of.
Yeah.
Get support from.
Absolutely.
That's really important.
It is.
Yeah.
It's a great way to learn and grow as a trader.
Absolutely. And it can help you stay grounded.
Yes.
When things are going well.
Keep you humble.
Yeah. Keep you humble.
Yeah.
And it can also be there to support you.
Yeah, when you're struggling.
Yeah, when you're going through those tough times.
Absolutely.
Now, I want to circle back to something that Davey mentioned. That really resonated with me.
Right.
And that's the idea that even a system that seems profitable might not be right for you.
Right, for you.
It might not be the right fit.
Exactly. Different strokes for different folks.
Yeah. And he uses that example of the system with the high expected value, but also the high risk of ruin.
Right. A lot of drawdown potential.
So even if it looks good on paper, it might not be
suitable
for you.
Right.
Yeah.
Depends on your risk tolerance.
Yeah, your risk tolerance,
your account size, your goals, your training style.
Yeah, it's about finding that right fit.
Yeah, it's like that, high performance sports car again.
Exactly.
It's not for everyone.
Yeah.
You need to choose a system that aligns with your comfort level.
Absolutely.
And your risk tolerance.
Yeah, and your goals. Yeah.
So as we wrap up this deep dive into Kevin Davey's book, what's the key takeaway you want our listener to walk away with?
I think the most important thing is to embrace the journey.
Okay.
Trading is a continuous process.
It's a marathon, not a sprint.
Exactly.
Yeah.
It's about learning, adapting, refining, setting realistic expectations, managing your risk, developing those mental and emotional skills.
Right. It's not just about the technicals.
Yeah.
It's about the mindset.
It's about you.
Yeah.
Yeah.
So trading can be challenging.
It can.
But it can also be incredibly rewarding.
It is.
If you approach it with the right mindset. Absolutely.
And if you're willing to put in the work. Kevin Davey's book is an excellent resource.
It is.
It gives you that roadmap.
It does.
And a framework for success.
Yes. And it reminds us that success comes from
hard work,
dedication,
and continuous
learning.
So thanks for joining us for this deep dive.
It's been fun.
It has been a pleasure.
Yeah.
And we'll see you next time.
See you later.